from the Ironworth Trading Show, y'all. I hope y'all having a great weekend so far. I hope y'all had a great, I'm sure y'all had a great weekend trading. After the last weekend that we had, I taught y'all a lot. Going into the week, I'm sure a lot of y'all implemented what we learned about taking losses. I'm sure a lot of y'all implemented what we learned about position sizing. And I know y'all eager to actually execute the information that we've been going over this weekend or last week, right? For those that was here or for those that watched the previous videos. But today I want to go over a couple of companies. I'm going to talk about how the market pretty much broke records last week. The stock market made history last week. We are going to go over, I'm going to give y'all a couple of stocks that I'm looking at buying this week. We got a few companies having earnings season coming up this week coming up. All right, so y'all stay tuned. Pull up a chair. Thank you for liking the live. I appreciate it so much. Y'all, if you're new here, hit the follow button. Share the live out. You are about to learn a lot. All right, you're about to learn a lot. Tune in. Before I get started, though, I wanted to ask y'all, what do y'all know about MP? For those who haven't seen my show before, have you ever heard of MP? Ticker symbol MP, Materials Corporation. What y'all know about them? Move y'all comments out the way. No? Never heard of them, Marino? I've talked about them a lot. MP Materials is an American company that produces rare earth materials. It's like rare earth materials. Do you know what rare earth materials are? Y'all, if y'all new here, hit the follow button. I encourage y'all to share the live and please invite more friends into the show tonight. I want you to understand, for those that's listening, when you hear the words rare earth, if you don't know it, don't overthink it. These are materials that are extremely useful for making high-tech products like the one that you are using to listen to me on or watch me on. Some of y'all drive cars that got rare earth materials inside of them. All right, wind turbines, electric vehicles, cell phones, you name it. One of the most important materials MP produces is called neodymium. And I don't know the second word. I think it's praseodymium or something. It's literally NDPR on the periodic table of elements. Why do I care? Because that material is used to make very powerful permanent magnets. Who did y'all hear talk about magnets here recently? Who did we hear talking about magnets here recently? Let me make sure my mic's set up right. Who did y'all hear talking about magnets here recently? The Orange Man. Either way it go, that's not why I'm talking about it. We was talking about MP before he was. No materials and USAR for that sector. That's right, Bradley. That's right. So these are not your average little magnets that you put on your refrigerator. When I talk about magnets, y'all, we are talking about the kind that are used in robots, drones, again, electronics, electric vehicles, airplanes, jets, and aerospace and defense equipment, okay? Think big magnets. All right, so I want to explain to y'all, like, this is pretty much the easiest way to understand this company, MP. They produce important materials that help make important technology work. Are we clear? Now you know who this company is. Do you hear? Y'all, everybody put a W in the chat if you heard that. I need to make sure y'all locked in. Y'all know how we get down over here. Because they just went from $37, all right, about a couple weeks ago, all the way up to $61. All right, almost $30 out of the money. I want y'all to tap in because I'm going to give y'all a couple of stocks at the end of the show that I pretty much I'm calling it again. We call MP several times. All right, let's look at the high on this. $76. Can they go back there? Can they go back to 76? Let's mark that level. How y'all doing though? Everybody that's just coming in, can y'all take time to tell me how y'all doing? And if you would like me to go over anything tonight, please feel free to put it in the chat. Any questions, y'all, I'm here to answer your questions. That's what I'm here for tonight. All right, yeah. So it was in a downtrend. Y'all see how it was in a downtrend? The price was making lower highs, and it was making lower lows as well. And it broke out of that. It broke out of that structure. All right, y'all see that? So where does MP get these materials? MP owns something called the Mountain Pass Rare Earth Mine, and it is located in California, y'all. This is one of the most important rare earth resources in the U.S., but they are not trying to just dig the material out of the ground and sell it. They are working towards controlling more of the entire supply chain. All right. They mine the resources from out the earth. They process it. They refine it. They make the metal, and then that makes the magnet. You feel me? So MP has historically been the strongest towards the mining and processing side, but is now expanded into magnet manufacturing at the facility that they got in Texas, if I'm not mistaken. All right, so we've been tracking MP materials for a while now. We've been looking at the financials. We've been looking at the fundamentals. We've been checking out the news flow, the technical structure, and as planned, we established our first position between $50 and $52. Well, when I say we, I'm just assuming that people got it when I got it. This ain't financial advice. You know what I'm saying? I got in. I can only speak for myself. I don't know what, but I do my best to tell people, like, look, this is what I see, and this is what I see. I don't tell them everything because I don't want nobody just jumping in, not knowing the risk involved, right? So I don't do that. We don't do that over here. You gonna take it at your own peril. But my point is, we got in between $50 and $52. The price broke through 53, but it was like 53.50, and that confirmed the short-term trend that we was looking for. Some of y'all got in near that price, and y'all sitting cool and calm right now, right? Y'all watching this play out exactly how we mapped it out. Other people waited until the move was already obvious. They jumped in after the run, and now you holding a completely different risk to reward setup than the people who got in on time with the right entry level. All right, so there's a gap there. I want to talk about that gap, y'all. What's happening, Bree? We want to talk about that gap. So two people trading the same stock, right? Some people bought MP materials at $37 2 weeks ago, and some people bought call options. All right. What's happening, Cool Hand Luke? What it do? Bree, thank you for the rose. I appreciate y'all for tuning in, y'all. My favorite people to see. Look, y'all, that gap is it's same information, same stock, two completely different outcomes. That's the whole conversation right now. I saw this exact pattern play out over and over and over and over. I was around a bunch of institutional traders, y'all, and investors, all right? Retail and institutional traders, they can research the same company, read the same earnings report, land on the same conclusion about where it is headed. Bree said all of your lives are recorded on YouTube. I record them here on TikTok, and then I post them on YouTube, but I'm like 3 episodes behind, okay? Yeah, I'm like 3 episodes behind. Edit them myself. It's, no excuses. No excuses. I'm going to edit them. I usually drop them as is and don't do no editing, but I've been working on, cutting pieces out. I made my own theme song, you feel me? My own little, I produced my own Ironworth trading theme song. Anyways, I want y'all to get what I'm saying, right? Retail traders, that's you and I, and institutional traders, that's like banks, hedge funds, etc. They can watch the same information, research the same company, right? And get the same conclusion about where the price is going to head and still walk away with completely different results. Cool Hand Luke, it was decent. You know, I can't complain. I can't call it I spoil it. I can't call it I spoil it. Anyways, to show y'all why this happens. More importantly, if y'all, pay close attention, I'm gonna show you how to close that gap in your own account. Right? So I will go over a few of my own individual stock picks tonight, but I want y'all to actually understand how the market prices things, literally, and how professionals operate inside of a market. So you can understand why the same stock can make one person make money, right? This person made money, and then it cost another person the money that they thought they was finna make. Even when both of them was right about the direction. That don't matter, okay? So let me kill a myth real quick. What you trend on? MP, we trended on VELO. VELO 3D. And I got another good one I'm about to go over. But most people think institutions, the whales, the big money buyers, the big hedge funds, the institutions, right? The big traders. They think that they win in algorithms, all that extra shit. They think they win long term because they got better information, better research teams, better tools, better software, more accurate predictions. Yes, this stuff matters, okay? I'm not saying it don't, but it is not the real edge. You understand? If you think the gap is they know something that you don't, you're going to spend your whole trading career chasing information instead of you actually building a process. It ain't information. I know a lot of y'all feel like, oh, they insider trading and that's I mean, sometimes, yeah, I ain't gonna knock that, but information is not what's costing you money. Tariq, we not here to do that. We're here to teach. I'm not here to give you fish, Tariq. I'm here to teach you how to fish. Tariq said, what is your opinion, sir? Is it going up or down? Tariq said, fuck all that. Tariq said, man, I don't want to hear all that shit. Is it going up or down? Cool Hand Luke says, the trend is your friend. Correct. So again, y'all, I'm telling you, I've seen institutional decision making in my face. I've watched calls that was dead right. I watched losses come from earnings misses, like people lose money because they thought the earnings was gonna go one way and it didn't quite beat or meet expectations. Sometimes it did and it still went the wrong way. My point is, if you pay attention, you can see what literally separates institutional traders from retail traders, and it's not accuracy. Nope. The edge is not about being right more often, y'all. The edge is having you already deciding what you're gonna do when you wrong. Didn't I tell y'all that yesterday? I think I spent like 2 hours talking about a daily drawdown limit and a weekly drawdown limit. You know? Cool Hand Luke said just use the 9 and the 20 and the 50 EMAs. But my point is, the edge is not an indicator either though, Luke. It's knowing what you're going to do the moment you are wrong. If y'all can lock that in, you're going to make a lot of money in the market. And because you can control how much you're losing, you're going to be able to come back. You're going to be able to trade again. Yeah, you're going to win. Because you understand, and understand the concept of risk management and risk to reward ratio. So let's talk about retail traders real quick. Retail investors too. They spend most of their money, most of their time, right? Most of their mental energy on one question. They say, what stock do I buy? Or they ask the question like dude asked me, hey man, what is it going up or down? Cool Hand Luke said, I got my target before I get in. I got my target before I get in, player. That's what I know. That's what I know, Cool Hand Luke. That's what I like to hear. You don't stop loss too before you get in, you winning. But that's what people want to know. They want to know, what stock do I buy? That's the whole decision-making process for a lot of people who getting in the trade. They just like, what do I buy? What stock am I buying? Is it going up? Is it going down? Am I buying a call? Am I buying a put? That's their whole decision-making process. For an institution, for the professionals that's picking the stock, that's just step one. Picking the stock is just step one. They might got like 5, 6 more steps after that. So the real work that actually determines the outcome All right. It happens after the stock is already selected, right? So you do your research. Do y'all know the word valuation in this context? I don't got no moderator in here right now, but y'all better not go buy nothing called clap coin because you might get your ass clapped. TikTok, I'm just playing. That's for entertainment purposes only. Let me mute this, whoever this is coming in here, spamming my live with the BS. I gotta get them out of here. All right, but anyways, literally, the professionals, they pick the stock, then they do something called valuation. And we're gonna talk about what valuation is, so y'all will know whenever y'all hear that word, it won't sound foreign to you. All right. They do research, they do valuation, they make the purchase, then they think about position sizing, monitoring, and then they getting out the trade. Retail traders, rookies, like, beginners, they collapse all of those decisions into one moment and they call it a trade. All right. So that collapse is the entire gap between somebody buying MP at one level and somebody buying MP at another level. You understand? I took the long route on explaining that, y'all, and I apologize, but it's all good. I just wanted to make sure that everybody understood it. I'm going to assume y'all don't know a lot. Even though I know y'all know a lot, I'm only doing that so that I can cater to the people who really don't, who are super new to investing and they beginners. So I want them to understand rookies are people gambling on SPY. Dakota Phillips, they doing a lot more than just gambling on SPY. Some of them are not gambling, but they are new. You can be new and not be gambling. Are you talking about PE ratio, says Black Diamond? No, I was just talking about MP. Right? I was just explaining MP. But I'm gonna make it useful. Let me land this plane. Steven said life been tough lately, so I'm blessing the first 6 folks that blocked me. All right, I got you. I'll block you first. Block. He ain't really say that, y'all. I just had to finish the sentence the right way. Okay, got you. All right, so look, you don't need to have $1 million, right? You don't need the institution's capital. You don't need the same money that they got or their research department in order for you to think like them. You need their process. And this is how each step that I'm about to give you will translate directly into your account, no matter what your account size is. All right, so y'all might want to take notes on this part right here. Clear down trend on the chart. Cool hand, Luke says. Yeah, we just broke it. But look, hear me out. Take notes on this part, y'all. This is the good part. So I know a lot of y'all skip step 1, and it's called research. Research. That means you need to understand why the company or whatever setup that you trading, why is it actually attractive to you? Did you do any due diligence? Did you do your due diligence? Did you actually do some research on that stock, on that specific trade to figure out, like, what's your thesis? Not somebody on TikTok said this is going up, so I got in or I'm about to get in. You need to have real reasons. Cool hand Luke said, conviction people. Luke, about on a scale from 1 to 10, how important do you think what I'm saying is to the people? I mean, real reasons though, not bullshit. Okay. Earnings trend, sector position. You might see a catalyst on the calendar that's coming up, but if you can't explain the why in one clear sentence to somebody else that you tell them, hey, this is why I'm getting in this trade, you ain't researched nothing. You ain't researched shit. You just heard about it. Cool hand Luke said, you already know with what you just said. Conviction, yeah. Valuation is next on the list. Black Diamond says you're giving good advice. Discipline is required when investing, not emotions. That's right, Black Diamond. So now we finna talk about valuation. Number 1 was research. Number 2 is valuation. Valuation means you're asking whether the current price actually reflects what you just researched. And make your own valuation too. Don't go off what the analysts say, because sometimes they dead wrong. And sometimes you got the mind to see. Sometimes you see when a stock is worth more than what it really is, or should be worth less than what it really is. Valuation is you asking whether the current price actually reflects what you just researched, or whether the move already happened and you too late. Cool Hand Luke said, money, money. So y'all, this step is the one that a lot of people skip entirely. They see a stock is good and they buy it at whatever price it happens to be at. And they got zero regards for whether that price is already taking in account good news or bad news. Sometimes the good news already priced in. Sometimes bad news already priced in. And they just didn't do no research. Cool Hand Luke says forward sales is key. Purchase is the third thing on this list. Purchase is the part that a lot of y'all think that's the whole job. You just think you just got to buy the stock or buy the call or buy the put, right? But that's the smallest decision in the entire sequence. This is just the execution part. You already know from the other lesson that I gave y'all, the execution means choosing the right order type for the situation, not just clicking buy. I did a whole seminar on order types. And if y'all missed that class, it should be on YouTube. Yeah, I got it on YouTube. But anyways, that's the third thing on the list. So you got to do your research. You come up with your own valuation. And remember, purchasing is the smallest part of the process. Position sizing is more important. Position sizing is deciding how much of this specific trade you are willing to lose before you ever place it. So you sizing your position is you deciding how much of that trade you are willing to lose before, keyword is before, you ever place that trade. You shouldn't be trying to put the seatbelt on in the middle of the car crash, ladies and gentlemen. Y'all put a W in the chat if you understand that. Let me know. I ain't talking about how much you excited to put into the trade. So this step right here is the reason why MP Materials like pretty much got, when I gave the signal, 2 different people bought it, right? It got split into 2 outcomes. The people who sized in on plan at the planned price are in a completely different risk position than the people who chased the move after it already ran. So I ain't telling you to get in nothing after it already ran. Now, again, we're going to go to monitoring. Monitoring means the job isn't done once you are filled. Just because you got your position filled, just because you got in a trade, does not mean the job is done. You are tracking whether the reasons that you bought that position or got into that trade, you checking to see if the reasons that you did it are still true. Or am I still valid? Right? So the professionals, the institutions, they don't set a trade and walk away. They watching whether the thesis is holding, and they act the moment it stops holding, not weeks later when the damage is already done. Thank you, Emco, for the gifts. I appreciate it so much. Black Diamond said the chart presented was in a bearish trend. The breakout past the lower low is the buying opportunity. Yeah. That was around 40. That was around $42, really. Right. I mean, 40 would have been not so much a guarantee, but yeah, around $42, $44. But yeah, you can see a breaker structure. I don't know about hurry up and buy, Cool Hand Luke. And MCO, I appreciate you for the love. Y'all, whoever tapping the screen, I appreciate y'all so much. Thank you. It helps me out a lot, y'all. It pushes the live out to the algorithm, to the For You page, sorry. But now, monitoring, remember that, y'all. It means that you still need to pay attention to that position. And the last thing is your exit. Your exit plan is damn near just as important as you knowing how to get out of a building, a big building, when it's on fire. But if you didn't look at the exit, you don't have no exit plan. You don't know where to get out at if this shit is on fire. Okay? Even if it's not on fire, you don't know how to get out. You just in a big ass building. Learn the order types. But anyways, exit is planned before entry, just like your stop loss is planned before you get in. Your take profit is planned before you get in the trade. You don't improvise this afterwards, y'all. This is mandatory. This is not optional. Y'all, let me know y'all get that part. For my beginners and my traders out, my new traders out there, my new investors, I want to make sure y'all listening more than anything, because y'all really who I'm talking to, right? You need to make sure you got where you're getting in at already decided, where you getting out at already decided before you get in. You don't just go to buying shit and you ain't did no research. You haven't done valuation. You don't even know what your position size is going to be. You don't know how to monitor shit. You don't know how to get out of shit. This is what we here for. Don't do it without knowing. This is not a casino. At a casino, you can just put the money in a machine and press a button. In the market, you got to actually do some math. And a lot of y'all don't like math. All right? Some of y'all don't like math. Be honest. And more scarier than math, more frightening than math is fear and greed. Fear and greed. Oh, yeah. It'll do a number on you. You'll be up and you'll be afraid that you're going to lose what you got. So you'll get out the winning trade. Or you'll be down. And you'll think that it's going to go back to break even. So you'll hold a losing trade. So my point is, having an exit plan before entry is going to help you. You need to know where you're going to take profit. You need to know where does the trade prove you wrong. Both of those numbers exist in your head or better on your order ticket before you ever click buy or sell. That's the whole gap that I've been talking about for the past, 20, 30 minutes. All right. So I'm going to explain to y'all why I might tell y'all about a trade. I'm going to tell y'all about a stock, but I want y'all to know that the same trade is not the same trade for everyone. I'm going to pull up VELO. Let's use VELO as an example. This is like one of the other signals that we gave out last week. For those that was paying attention, VELO was at a support level. VELO was at a support level down here at $8 or $9, $8. It kept bouncing off that $8 level. All right, let me go out to a daily time frame so you can see what I'm saying. Which that ain't helping. 4-hour cool. Some of y'all already saw it. Yep. It did it here on the 28th. It did it here on the 28th, the 29th. It did it earlier this year in March. I mean, that's just been a very strong level. It's held that level since December of last year. It has failed to break below that level since like 4 to 5 times. It's a very strong level of support. Now, some people feel like the more it hit that level, the weaker that level becomes, but it looked pretty strong to me. Anyways, the whole point about me bringing up VELO is I'm going to show y'all this process in action, okay, with the recent example. Before VELO released their earnings, I looked at the first quarter's operational changes. My boy Cool Hand Luke will tell you how important it is to look up this type of information before you invest in the company. I'm looking at the order growth. I'm looking at the improved profit margins, management's own guidance. I want to know where this company is headed. Based on that information, that's when I'm like, okay, this is something then I go and do chart analysis, technical analysis. I'm back testing it. But my point is, based on that, I read that this was a second quarter turnaround about to happen. I want to be precise about what I'm telling y'all, though. That was just my judgment. It is not a guarantee. I do not have no type of insider information. This is just me judging this shit based on research and valuation. The first 2 steps that we just covered about 20 minutes ago. Okay? So based on that judgment, I advise y'all to do y'all type of research. Y'all do your own research so that you can come up with your own thesis. You don't need nobody to tell you what to buy once you learn how to do research on something. Okay. But I gave the signal. I'm like, hey, I'm about to build this position around $13. I might use like 40% of my buying power on this one. I sound crazy, but yeah, this is what I'm finna do. Not all of it, just 40%, because sizing is never all or nothing, even when the conviction is high. Even when the conviction is high, even when you have high conviction, that means even when you are very sure. After earnings dropped, the stock moved nearly 20% in after hours trading. Now, this is the part that actually matter more than that little bitty ass 20%. A lot of people have told me that they want more trades like that. They want more volatility, faster returns, and I understand why, but I want y'all to hear the honest version of what a trade like this actually is. The company is still operating at a loss. You need to know that. That's right, Alvarez, structure. Yeah, this company operating at a loss. So they got this product EBITDA, right? It's still negative. It needs real future investments for them to expand capacity. That means if I read it correctly, you can see a fast move like what we just saw. If the next report falls short, you can just as easily see it fall and drop after hours. Chicago, what's up? How you doing? So for somebody with experience and you know what you're doing as far as size and you got discipline, that is a trade that you can manage. For a beginner though, who don't have a plan when it comes to sizing, that same trade can produce a loss that you are not prepared to absorb. Okay, so be careful. Just following behind people buying the same shit that they buying. This is exactly why I do not push a trade like that into general pop. I'm not sending that shit out onto TikTok. This is why y'all don't hear me talk about everything I'm trading on TikTok, because everybody don't got the same risk profile. Everybody got different risk tolerances. No egghead Targaryen. You asking me, did I just start the live stream? I've been live for 35 minutes now. You ain't missed a lot, but whatever you miss, it'll be on YouTube. Just hit the link in the bio and subscribe to me on YouTube. So if you ever miss a live, you can just go right there and watch the whole replay. If y'all new here, hit the follow button so you don't miss another live. Hit the notification bell because I'm not on the schedule with this going live. I'm free. I can do whatever I want. I can come on here whenever I want. So I usually come on at 11, but I might pop on 222. You never know. It's 222 right now, y'all. I might pop on at 222. It might be 1222. It might be 922. I don't know where y'all at. This is me, Gummy Bear. What's up, Gummy Bear? I don't know who the fuck Gummy Bear is, y'all. What up, Gummy Bear? How you doing? Long time no see. I ain't seen you in a long time. I've never seen Gummy Bear a day in my fucking life, y'all. Anyways, look, y'all. I don't push trades out like this one because I do not know what your risk tolerance is. Do y'all know what that mean? What I mean by risk tolerance? Huh? Some of y'all got different experience levels. I have to take that shit into account. So somebody that's been trading a few $1,000s and somebody trading a much larger account, they are not taking the same trade. Oh, you too famous now. I ain't never, listen, I'm finna have to, I don't know what you might say, so let me mute you. I don't know who you is. You feel me? I'm sorry. I'm not too famous now, no. But I don't call nobody Gummy Bear. And you ain't finna, somebody came in here yesterday and said some crazy shit. You know what I'm saying? You gotta watch these people on TikTok, y'all. I don't got no moderators either right now. Earnings before interest, taxes, and amortization determine companies' financial strength. Great information, Black Diamond. So that's what I'm talking about. Great. They need to research what amortization is too. All right. So somebody who trading a couple $100 versus somebody who trading a couple $1,000, they not taking the same trade. It could be the same stock. It could be the same strike price. Understand that. Right? Even on an identical stock at the identical price, some of y'all can sit calm through a 10% daily swing. Some of y'all can, how many of y'all can stomach a 10% swing on, I mean, when I say swing, I mean this shit dropped 10% and you can stomach that and stay in the trade and not get out the trade. I know a lot of y'all gonna say me. I know I'm gonna see a lot of me's. Tell the truth. Shane the devil. Tell the truth. I'm waiting. Tell the truth. Let me know. How many of y'all can 10% loss? How many of y'all feel sick at 3%? How many of y'all, let me know if you feel sick at 3%. Because I know we're my people out there that don't like to lose money. And you feel sick when you down 3%. Black Diamond said you have to have ice water in your veins to do that. Black Diamond, no, y'all. Hey, you got to have ice water in your veins to hold a 10% loss, Black Diamond said. How many of y'all get a 3% loss and you feel sick? Let me know. I don't see enough comments. Maybe TikTok holding y'all comments back. It should be flooding with comments. If y'all new here, hit the follow button so you don't miss another live stream. Yes, I'm talking to you, the person that hasn't hit the follow button yet. Black Diamond, that's what's up. Appreciate you. Thank you. Marina says, I have. Okay, so what would y'all like to do about that? Tell me, what would y'all like to do about that? What would you like to do about it? Hunter said, meme coin season is the reason why I'm getting blocked. I got you, Hunter. It's not meme coin season. It's because you brought it up and it's off topic. Anyways, y'all know we don't play them shit coins. Don't come in here promoting your shit coins. Forex trading master. We don't do that over here either. Let me get you up out of here. I really need a moderators, y'all. Who want to be moderators? Who want to moderate tonight? Yeah, y'all got any questions? So for my people that feel sick at 3%, I'm gonna explain something to y'all. I cannot responsibly hand the same aggressive plan to the person that feels sick at 3% that I gave to the person that can hold a 10% loss. Do that make sense? Even if I'm saying, okay, look, this is what I'm finna buy. But I can't tell that shit to the person that can't take a 10% loss. Because I know if I can stomach this shit, I know my boy Sam can stomach this shit. But I don't know about George. George might want to jump off a cliff, figuratively speaking, TikTok, if he take a 10% loss. Can't tell them both the same trade and call that education. We don't do that. That's not caution for the sake of caution. I'm not doing that just to be careful. This is literally a principle, right? That I just spent this whole show talking about. You got to know the account before you build a plan, not after you build a plan, right? Know your account, know your limit. So nothing I share, y'all, in any setting is financial advice. Are we clear? I'm not promising anyone a winning trade because nobody controls the earnings reports that come out. Nobody controls the sudden news or where the market decides to move next. What I can control, though, is what I bought. I can control what I hold on to myself. I can control how I explain things, right? Is explaining the opportunity and the risk honestly before the trade, giving clear execution standards during it, and handling it directly when I'm wrong instead of disappearing behind it's long-term bullish. I'm long-term bullish. Nah. I'm gonna let people, that ain't how this works. I ain't letting y'all learn the hard way. I'm gonna tell you now. Figure it out before the trade. Not during it. Clear? Black Diamond said your risk tolerance has to be assessed first. You win if you figure that out. You win if you figure that out. That's the real difference between retail and institutional thinking. If you can apply it starting with your very next trade, okay? What's unclear, y'all? Tell me. Let me know. How do y'all feel about what I just said? What do y'all want me to go deeper on before we close? That's just the first topic. I'm not even done. I want to close that topic because we want to go over how the market made history this week. But yeah, how do y'all feel about that? Let me know about what y'all just learned. Tell me. Let me know. Let me know. Buy and hold strategy doesn't work in today's market, says Black Diamond. We finna talk about that. But let me ask y'all an honest question. Last week, right? This is SPY right here. So last week, let me move this picture. The stock market made history. Made history, Black Diamond. So you saying that the buy and hold strategy doesn't work in today's market? The people that bought and held are winning right now as we speak. Correct me. Please correct me. I'm not opposed to being corrected. But are they or are they not winning? Anybody that bought and hold, they winning. Maybe not on a daily basis, but that's the point of the and hold part. The market has, every time the market has crashed, Black Diamond, it has recovered. It has never crashed and not came back to the level it crashed from and went past that. Ever. That's not my opinion. Did y'all account make history with the stock market? Or was y'all watching this shit from the sidelines, wondering what everybody else talking about right now? Y'all wondering what I'm talking about right now? Did y'all take place in the market? Because the market made history last week. Black Diamond, this is what I'm talking about. You have to take profit as the market increase in value and buy again on the dip. But it works though, Black Diamond. You right about that, but it works. My point is it works. It ain't nothing changed, but change. Wondering don't make money. That's right, Cool Hand Luke. That's, excuse my French, y'all. That's fucking right. Wondering don't make money. Don't nothing sleeper but a dream. Listen, y'all, I'm not asking y'all this question to make y'all feel like you behind, right? I'm just saying the stock market made history. Did your account make history with it? I'm asking that because by the end of tonight, I want that answer to be different for you going forward. Black Diamond said, I see your perspective now. That's all I'm saying, big brother. That's all I'm saying. So if y'all make money going forward, it won't be because you got lucky on a stock. It's going to be because you actually understand, right, and understand what happened. You're going to understand why it happened and what that means going forward. Cool Hand Luke said you can't win if you don't play. That's right. So tonight covers 3 things. I already went over a few things, but going forward, I'm going to talk about how the market cut up last week. We're going to explain why that happened. I'm going to talk about what to watch for in the week going forward. And this is the part that will actually change how you operate going forward. The real difference between a trader and an investor. I know I haven't even touched that topic yet, y'all. That's what we about to talk about. I want y'all to know which one you are being at any given moment. Are we clear? This might be the single most important piece of self-awareness in this entire business. Knowing which side of this field are you on. Because some of y'all heavy on one side and you neglect the other. Right? I think it's okay to be an investor that neglects trading, but I don't think it's okay to be a trader that neglects investing. I don't. But I know a person that is very close to retirement and they have no intentions on holding anything long term. And in fact, they close to heaven. I'll let her tell it. She close to heaven and she ready. She like, I ain't holding nothing. I don't know when I'm gonna get up out of here. But I still encourage her to invest. Even then, pass it down. Whatever the case may be. This what we're here to talk about is you knowing which one you are at any given moment. So let's start out talking about what happened last week. Y'all know what the S&P 500 is. For those that don't know, the S&P 500 is something called an index. You can look at an index like a basket of stocks, like a folder of stocks. And inside of that folder or that basket, let's call it a basket because the ETF is like a folder to me. Inside that index is 500 of the largest companies in America. Let's get rid of them real quick. Hold on. Every night I gotta fight to prove my love. All right, got here. Y'all come here talking crazy. You ain't gotta worry about catching no dog. You gotta worry about a dog catching your ass. I'm gonna get you up out of my live real quick. All right, so again, where was I at, y'all? The S&P 500. All right, it tracks 500 of the best companies in the market, right? The largest companies in America. The number that most people mean when they say the market, they usually talking about SPY. They usually talking about the S&P 500. So this closed at a record high on Thursday last week. It closed at the highest level it has ever been. Mostly SPY, Cool Hand Luke. Mostly SPY. Or micro SPY. Or MNQ whenever I'm trading futures. But yeah, I like to trade SPY. I trade individual stocks too. Black Diamond said made a lick on US Dow 30. The Dow, y'all, that's 30 big old school companies. Whenever you hear somebody talk about the Dow Jones, they talking about 30 big old school companies. All right. Think about like if you got 2 apartment buildings and inside of this apartment building, you got a bunch of young tenants that could get rich at any moment and leave your ass hanging. And then inside the other building, you got 30 tenants that's been paying you consistently for 40 years. They never missed a payment. That's the motherfucking Dow. That's the Dow. Because the Dow is full of names that big companies, they ain't went nowhere and probably not going to go nowhere. But I'm getting off topic. My point is, Thursday, last week, the S&P 500 made history. Black Diamond said, good example. So that wasn't just any record for what happened on Thursday, y'all. Right? It was the 27th record close of the year for this index that we talking about, the S&P. 27 separate days this year in 2026, the S&P 500 closed higher than it had ever closed before in its entire history. I don't think y'all heard me, so I'm going to say it again. This year, SPY or the S&P, let's say the S&P, it closed 27 separate days higher than it had ever closed before. On Thursday, it touched an all-time intraday high of $7,816.70 before settling into its closing record. Let me get rid of Mr. Brooks. You get blocked. You get blocked. I'm making licks on future scalping, intraday, and swing trading. Nah, for sure, Mr. Westman. I don't doubt you. I don't doubt that you are at all. I know. How do y'all feel about what I just told y'all, though? What do you think? Tell me, what are y'all thoughts? Thank you for the follow, Nikki. I appreciate it so much. Yeah, y'all tell me your thoughts. What do y'all think? Any questions? Y'all got any questions? Let me know. Let me know. No doubt. And I appreciate that too, Mr. Westman. And Black Diamond. Yeah, thank y'all. But I'm saying, I'm serious. Anybody got any questions, don't be afraid to ask, because again, somebody else might be afraid. It might be 10 other people that want to ask the same question. All right. But that happening, that capped the index's third consecutive winning week. SPY won 3 weeks in a row. And then, all right, so who that was said they made money off Dow? That was Black Diamond, right? Y'all remember I told y'all the Dow Jones Industrial Average, this is 30 of the largest, most established companies in the country. This held above 54,000 points, a level that it had broken through for the very first time in history just 2 weeks earlier. And then we got the NASDAQ. What y'all know about the NASDAQ? Some people trade QQQ, right? But the NASDAQ, which leans heavily towards technology stocks, technology companies, that also closed at a record. But that was because of Meta That was because of Micron and that was because of Netflix. That's what pushed. Some of those companies are inside. Remember, I told y'all an ETF or index is like a folder or a basket of stocks. Well, inside the basket that is called the NASDAQ or QQQ, it's all technology companies in this basket. Inside the basket called the Dow Jones is 30 of the biggest companies or the most established companies in the country. And then inside the basket called the S&P 500 is 500 of the best companies in the United States. What I'm telling you is the one that pushed the NASDAQ, the technology one, there's specific stocks inside that basket that are so heavy it weighs down the basket the most. And in this case, it was Netflix, Micron, which is like a microchip company, and Meta. Y'all all know what Facebook is. Okay, so the piece that I actually want y'all to pay the closest attention to, because it's gonna tell you something that what I just said not gonna tell you. The Russell 2000. Who knows what the Russell 2000 is? You know what the Dow Jones is now. You know what S&P 500 is now. And you know what the NASDAQ is. The last one I want y'all to know is, what is the Russell 2000? Black Diamond said the 4 symbol stocks. NASDAQ down 3 symbol stocks. What is the Russell? The Russell 2000, that's the small companies, y'all. Not the giants. Small companies. There's a basket full of small companies. The reason why you invest inside of a basket instead of just the individual stocks is you want to go through 5,000 stocks. You got time to go through. You got time to go through thousands of stocks. And it helps with more than just picking stocks. I'm just saying, like, you can invest in an entire sector at one time. You can diversify your portfolio and say, I'm going to take money and invest it into these companies split up, so I don't have to just invest in them each one by one. Black Diamond said the up and coming stocks almost like the pink sheets. The Russell 2000 are the up and coming stocks. That's right. Small companies. That hit a fresh all-time high 3 separate times last week, Black Diamond. I know it matters more than it sounds like it should. So think about it this way. When only a handful of massive companies are pushing an index higher. Remember, I just told y'all a few companies weigh more than the rest of them, and it's weighing down the basket or pushing the price higher, right? That is a narrow rally. It needs to be all across the board for it to be strong. Narrow rallies are fragile, ladies and gentlemen. Remove 2 or 3 companies and the whole story gonna fall apart. Nikki says tick code. What's the tick code, Nikki Pratt? I don't know what that is. Are you asking what's the ticker? S&P 500, or this is SPY? SPY, SPY, Nikki. I apologize for that brain fart. Of course I know what you're talking about when you say tick code. I just never call it a code. But I know what you're talking about. You're talking about what's the ticker? It's SPY or SPX. But in this case, we was just talking about the Russell. You can put in IWM is a good one. IWM is what you type in. iShares Russell 2000. That's the ETF for it, Nikki. $305, $304. JJ, what it do? Hey, yo, what's happening? What's up? What's up? What's up? How you doing? Good morning. How y'all doing? If y'all new here, hit the follow button, y'all, so you don't miss another live stream. But like I said, are y'all understanding that concept of if a couple of stocks are pushing that ETF or that index higher, then it's not strong. It's a fragile rally. It's not strong. If you take away them stocks, the shit can fall apart. Do you understand what I'm saying? When small companies start hitting record highs too, that tells you that strength is spreading across the market broadly. It's not just sitting in one concentrated name. It's not just in one sector. So we call that something in the trading world, right? It's called broadening participation. And it is generally read as a healthier signal Then a rally carried only by a couple of companies. Okay, this is healthy. Absolutely facts, said Black Diamond. JJ said, anyone seen PHO, a water ETF? Black Diamond said, it surely did. I bought MU when it was $75 a share. It passed $800, semiconductor stock. JJ said, I feel bad for putting money in something like water or air, but dang. Dog, why you feel bad for investing in water or air? I don't see nothing wrong with that. I don't see nothing wrong with that. Yeah. Put a W in the chat if you understand that a rally carried by a few giant companies is narrow and fragile. A rally where small companies are hitting record highs too, that's healthy. Last week showed us that the market is kind of healthy right now, Black Diamond. But I did not come here to this morning to tell y'all only good news, okay? We got to take the face out. We got to take the good, the bad, and the ugly. Because a complete picture is always going to include the bullshit lying in the grass. The dog shit lying in the grass, all right? It's always in the good picture. So there was real tension last week on Friday. 2 pieces of data landed that cut directly against the record-breaking move. We had retail sales. Y'all probably don't know what that is or give a fuck what that is, but tell me, what do y'all think about it? When I say y'all, I'm talking to the people who never heard of it in this context. I know a lot of y'all have, though, so don't take offense. All right, I love you. Don't take offense. Don't forget the huge data centers need water to chill the computers. JJ said houses. What's up, y'all? Let me know. Let me know what you think. Retail sales is a monthly measurement of how much consumers are actually spending at stores. They pay attention to that type of data. It is market moving information. Because of that information, right, it'll move the market. Now, it fell 0.6 of 1% in July. That was a surprise. A lot of people expected a small increase, not a decline. And on the same day, the University of Michigan's Consumer Sentiment Index, which is another thing that measures how confident everyday people feel about their own financial situation. I don't know, how comfortable do y'all feel with your own financial situation? They did a survey on it, and it came in at 51, well below the 55 level that they expected it to. So let this sit with what y'all saying. Don't just listen to don't just hear it. Actually sit with this. The stock market was making history at the exact same time real consumers was telling researchers that they feel less confident about their own money. Those two things can be true simultaneously. All right. Understanding why is a core piece of market literacy. The stock market is not a measurement of how everyday people feel, y'all. This is a measurement of what large investors expect large companies to earn in the future. Those two things usually move together over long periods of time, but in any given week, they can pull in completely opposite directions. That type of gap is exactly the kind of thing that separates somebody who understands the market from somebody who is just watching the number go up and assuming everything underneath it is fine. One more piece of data before we move forward. All right, because this is also an important number for understanding the move of this market right now. How many of y'all ever use the VIX? What do you know about the VIX? What would you like to know about the VIX? What do you know about the VIX? Can y'all tell me what you know about the VIX? The VIX, thank you for the love, Vandalin Baker. Space Jam, what's happening? Do y'all use the VIX? Do y'all know what it is? You ever heard about it? Mr. Westman says exactly. These are macro fundamentals that affect the micro economy. Also, Mr. Westman, I noticed that a lot of people only use lagging indicators. These could be considered leading indicators, right? The difference between the word lagging versus leading, right? A leading indicator versus a lagging indicator. An indicator like a MACD or EMAs, these are lagging. They are telling you what already happened. A leading indicator comes before the move. Jingleheimer Schmidt said price is a lagging indicator. Exactly. But I guess you can look at it. I guess you can look at it that way. Stream Genie said, is there a free site that give instant candlesticks? What? Is there a free site that gives instant candlesticks? How do I answer that, y'all? Can somebody in the comment section answer that for me? JJ Jingleheimer, I ain't got all the answers, Sway. Jingleheimer Smith said everything has already happened. Yes, sir. I keep it simple. Using anchored volume-based indicators. What do you recommend? I recommend studying price action. Simple as support and resistance to all the beginners. Learn support and resistance before you get stuck, and then use the indicators as extra levels of confirmation, right? Extra levels of, this is going to be a new word for a lot of y'all, confluence. I need to do a whole show on confluence. I will do a whole masterclass on confluence for y'all, okay? But till then, do your research on it. That's your homework. Definitely a student of price action. Yes. Jingleheimer Smith said, I'm super new, y'all. You good. This is a safe space for people who are super new to trading or new to investing. But I'm skipping the VIX. I'm surprised y'all still here. I would have got the hell on. Like, he taking forever to talk about the VIX. Before I land this conversation, this is something y'all really need to pay attention to, especially for understanding the mood of this market right now, right? And that's what the VIX is going to help you do. You also have to watch the stock consolidation as well. Yeah. So look, the VIX, this is an index too, but this index measures how much investors are paying to protect themselves against a sudden drop. Okay? We treat the VIX as the market's fear gauge. Yeah. The VIX is going to tell us how much fear is in the market. This index fell to $14. It ain't been $14 since the beginning of this year. Jacob Westman answers your question, Stream Genie 21. They said, try TradingView. Candlesticks are just visual records of price action. Real-time data. Wonderful answer. You did. I knew somebody in the comment section was going to hit with the hammer. Thank you so much, Mr. Westman. Mr. West is in the building. Whoever hitting the likes like that, hey, don't break your thumb. I appreciate you so much. And whoever the follow button, y'all, welcome to Ironworth Trading. It's a pleasure to have you here. Thank y'all for being such a wonderful audience. If y'all don't mind hitting the link in the bio so you could actually join the community, connect, learn more outside of this classroom or with 50 plus people in here or 40 plus people in here because 3 of them just left. But anyways, the VIX. A low VIX means very few people are currently paying for protection. That can mean that the market is calm, the market is confident. It could also mean complacency. So people assuming that nothing bad is coming. I'm not assuming it. I'm just saying. People assuming nothing bad is coming right before something unexpected actually happens. I'm not predicting anything bad coming, y'all. I'm just teaching you that when almost nobody is hedging, the market becomes very, very vulnerable to a sharp reaction if a surprise does show up. Simply because so few people is prepared for a surprise to show up. You understand? Y'all get that? Any questions? I know y'all understand. I don't like asking y'all, do y'all understand? What I would like to ask y'all is, how do you feel about what I just said? Tell me what you think about what I just said. Because I know y'all get it. I don't even like the word understand. But what do y'all think about what I did? Any questions? Talk to me. Let me know. Elaborate on the VIX. Nikki, you use VIX when you looking at SPY. Because SPY is telling you the whole market. SPY is the S&P 500. Remember I told you that's a basket of stocks, 500 of the best stocks in it, right? So you using the VIX to help you see whether there's a lot of fear in the market, because usually when there's a lot of fear, people selling. When there's not a lot of fear, people are confident and they complete they are, it's a lot of complacency, meaning they comfortable and they don't expect nothing bad to happen. Not saying nothing bad won't happen. We're not saying something bad will happen. But yes, VIX stands for Volatility Index. JJ says I was looking at the S&P chart. Yeah, you look at it with VIX. All right, but yeah. Somebody said look out for consolidation too. And that was right. That makes sense. Says Nikki Pratt. I think that's what you're saying, right? Great information, a good starting point for new investors. Filthy McNasty, what's happening? It's good to see you, big brother. So we're going to turn what is actually in front of us, right? This week that's coming up ahead, y'all. We got a couple of companies that got earnings I think we should pay attention to. Hey, Filthy McNasty, you right on time. I actually got something that I'm looking at this week that I think got potential to go up. I'm gonna tell y'all where I think it's gonna go to. All right, but don't take this as financial advice. This is just me giving you what I see gonna happen. We're gonna paper trade it, right? The paper trade brigade. We're gonna paper trade it. TikTok. This is for educational purposes only. So don't think that we on that type of time. But anyways, this week ahead is a retail earnings week, y'all. Right? What do I mean by retail earnings week? Why does this matter, right, in front of what we just talked about? Any word on futures, King? Well, if you kind of think about what we talking about right now, you could take this information and trade ES. You can take this information and trade NQ this week going forward. Right? MNQ says JJ Jingleheimer Schmidt. Let's go. That's right. So, Home Depot, Target, Lowe's, I think TJ Maxx. These are all companies. Who is TJX, y'all? Is that TJ Maxx? TJX. Yeah. TJX. It says the TJX Companies Incorporated is an off-price apparel and home fashions retailer in the U.S. The company segments includes Marmaxx and Home Goods. Oh, okay, it's not TJ Maxx. Yes, it is. TJ Maxx and Marshalls. TJX, Ross, Marshalls, probably BlackRock. Yeah. What's the home run play? I got you, Filthy. I can't do it right now. Right? You can't, what Nikki say? You gotta, I ain't gonna say that on here, but y'all know what I'm talking about. I'm in the chip boom. MUSK. I give you a hint. I tell you what it is. All right. It's D-Wave, but I'm getting off topic. We're gonna talk about it in a second. It's D-Wave Quantum. That's what I'm finna talk about in a second. But for now, I'm talking about these earnings that's about to come out, right? Home Depot, Target, Lowe's, TJ Maxx, they are all scheduled to give their earnings report. For those who are fresh and very new and don't know what the hell an earnings report is, it is basically the companies that are publicly traded. They come out and they explain to you how good they doing or how bad they doing, how much money they making, how much money they lose, and how much they owe, and most importantly, where they are going forward. Okay, guidance, forward guidance is what matters the most when it comes to us looking at that report card. Okay, that's all it is. That's why it's called an earnings report. You can look at it like a report card. So all these companies are scheduled to get their report card, so they better not hide it and act like they ain't get it like we used to do when we was younger or whatnot. Now, these companies that live are based on how much the average consumer is actually spending. It's some, you put them in their own sector. This is retail sales. And they literally came in weaker than expected, and consumer confidence just dropped. These reports are not just routine earnings, they are a direct test of whether what just happened last week was a real signal about the consumer or one just noisy report that came in. Remember, I told y'all we got the retail sales report last week, and it was weak. So we got to pay close attention to what these companies say this week during earnings, not just how much money they're making. We want to see what they say about their customers. TJ Maxx, Home Depot, Lowe's, and Targets. So pay attention to those because they got earnings. Now, earlier in the week, we also saw the Empire State Manufacturing Index and the NAHB Housing Market Index. They both got released on Monday. These are regional and sector-specific readings, one on manufacturing activity, and the other one is on home builder confidence. They pay attention to all this type of data that you probably wouldn't pay attention to normally, but some of us want to know, what does the home builder confidence look like? Some of us want to know, what does the economy's manufacturing activity look like? But anyways, while they will not move the whole market by themselves, that information is not just going to move the market. They just add another piece to the picture of whether the broader economy is holding steady or if it's cooling down. So 2 bigger events this week coming up is still ahead. Not this week, sorry, because it ain't really worth having on your radar. So you're not going to be caught off guard later is why I'm telling you, though. The Federal Reserve's Jackson Hole Conference. It's called the Federal Reserve's Jackson Hole Conference. Is coming up in about 2 weeks. That is where the Fed chair typically gives market moving commentary on the direction of interest rates. Whatever he say in that meeting is going to move the market. I've been watching the dollar too, DXY. NVIDIA's earnings report. How many of y'all trade NVIDIA or invested in NVIDIA? They got a report card coming out. All right. Earnings reports for NVIDIA is about 2 weeks out. 2 weeks out. Y'all know why I'm telling you this ahead of time? I'm telling you this before the implied volatility kicks in. It's actually already probably kicking in right now. How many of y'all know why it's important to know about this type of shit before the IV kick in? What happens once the implied volatility kicks in? Who can tell me? Because if you can learn, you can earn. What happens after the implied volatility kicks in to an options contract? What happens to the premium price? Kind of filthy McNasty, but right before earnings season or right before earnings report, okay, and there's a lot of implied volatility that comes out of nowhere right before. What happens is it drives the price up, Miss Baker or Vandalyn Baker. It pushes the price up. It makes it more expensive. So if I got in that trade before the implied volatility got added to it, what happens to the position that I'm in? Sabi, what's happening? What happens to the position I'm in if I got in? That's right. Let's make it make sense. Don't wait until a week of earnings to try to trade some shit. It pays probably to pay attention before the implied volatility steps in, before the IV gets higher. See, you don't want to get in when it costs more, and then you get IV crushed when the IV goes down. After earnings come out, the implied volatility goes away, and what happens then? The premium you paid $500-$600 for is now worth $100 or $200. All right. So NVIDIA got earnings coming out in about 2 weeks, and given how much of this year's rally has been tied to artificial intelligence spending, that single report is usually going to move the whole market, y'all. Not just one stock, but that report. Yeah. So this is the last piece of information I want y'all to carry into next week. Uh, Paying attention to one sentiment gauge is one thing, right? So if we, but I'm still about to do it. One sentiment gauge just recorded its highest reading of greed in 3 months. And at the exact same time, the VIX is sitting at its lowest point of the year. We got the stock market up here at the highest point it has been. We got the VIX at the lowest. Remember, I told y'all when the VIX is down, people buying. When the VIX is up, people are scared. The stock market is selling. A lot of people, the stock market going down. Westman said, thank you. Also, please clarify or teach implied volatility. I lost signal. Implied volatility is how much do we think the price is about to go up or down. And volatility just means how wild the stock is moving. Implied is how much do we think? Like that's like TJ Maxx right here is $152. So the implied volatility could be anywhere from 164 because that's how high it went before, or 147. So they expect it to either go that high or fall that low. The implied volatility is blah blah blah. They looking at how volatile the stock is, how high it can go, how low it could go. How much could it move? It can move $20, $40. It can move $10. What's the implied volatility on it? Is it gonna move at all? Does it move? What's the open interest? These are all variables that you should take into account when you trade in stock options. But when you are buying it outright, sometimes you just know that the company is good. You looked at the balance sheets, you looked at the financials, you did all the back testing, you did the study, and you gave your due diligence, and so you buy in the company because you know it's a good company. JJ asked me, is it a given percentage? Yes. Yes, I'll show you. Let's look at an options chain. Right here. The implied volatility on the contracts that expire in 26 days. It says right here in this column, the implied volatility on the 150, what's this? The 150 call is 26%. Who knows what the delta can also be used for? I see delta is for that contract, the delta is at 62%. So what does that tell you as far as probability? What does the delta tell you as far as probability? Do y'all know? Did you know you can use delta for that reason? I'm getting carried away talking about the Greeks. We're not here to talk about the Greeks. Not right now. Not right now, at least. What do y'all think about that, though? Tell me what y'all think. Thank you for hitting the follow button, DJ Talk. Y'all got any questions that I can answer? I'm here to serve y'all. Let me know. I'll answer any questions. Anything I can to you. And do my best to do so. The rate of change going to be higher, says Black Diamond. Black Diamond, can you believe I almost forgot what I even asked? I be waiting so long on the answer, y'all, from y'all, that I forget what I even asked. You know? The Vic says JJ. Oh yeah, I remember now. Probability and the delta. You can use the delta. So if the delta is at 0.62, you probably got a 62% chance of it ending up in the money. Did y'all know that? Some of y'all did. Some of y'all do now. Right? That's all that matters. Some of y'all did. Some of y'all do now. If that delta is say 0.13, you got a 13% chance of it ending up in the profit. I don't know what delta or gamma is. Says JJ, it's okay. We're gonna do I'll go over the Greeks again and again and again. I've heard it once. You really need it broken down to you though. Like, no, it needs to be simplified, right? Demystified and simplified. But y'all, listen, when I tell y'all that the VIX is down at the lowest point it has been and the stock market is at the highest point it has been, if you read those two signals together and not separately, When confidence is running high and almost nobody is hedging at the same time, that combination has statistically and historically been a moment worth watching very close. So this is a very important week that is coming up. Very important week. I don't understand the Greeks yet either. Yeah, y'all don't trip. I got videos all on YouTube if y'all want to hear me explain it. Go follow me on TikTok, Ironworth. Go follow me on YouTube. Go subscribe to me on YouTube under Ironworth Trade. Or inbox me and I will help you on a 1v1 level. You don't gotta watch a damn hour-long video. Get with me on a phone, in a video call, on Google Meets, on Zoom, on Discord, and I will explain it to you. That invitation is extended to everybody that's in the live stream right now. Just inbox me. Your name and your number and the best time to call. And be serious and not curious, okay? I'm not finna hunt you down. All right, so listen. What do I want y'all to carry into next week? Right? I just told y'all about the VIX. I just told y'all about how the VIX is down and SPY is out. So if you watch this closely, not because I'm telling you a drop is on the way. Let me show y'all what I'm looking at. I ain't saying a drop on the way. Somebody asked me, do I work with Wall Street? Do I work Wall Street? What do you mean? Don't we all? Don't we all here? I think we all do here. I ain't being funny. I'm being serious. At Wall Street, I'm not in New York, no. I'm not one of those. I'm him, not them. You know what I'm saying? I'm him, not them. Heard big drops on the way, says JJ. Could be. This shit could also continue to go up. Back to 30K, gold to 2K, Bitcoin to 30,000, gold to 2,000. Let's crumble the tops and get these cookies. JJ, you dreaming really, really big, JJ. You dreaming big, but it's okay. I like the optimism, even though you betting on basically a fucking recession. That's what it sounds like. I mean, not betting, but hoping for a recession, right? I wouldn't be mad if the housing market came. Let me shut up. I ain't gonna say that. I'm just gonna say that the houses could be more affordable for people that are looking to buy a home right now. That's what I'm saying. War man is not looking good. Are you saying war is not looking good, or are you saying that you calling the orange man war man? Y'all know this. What we doing is risk awareness. Like, we are being aware of the risk. That is the entire foundation of everything I teach here at Ironworth Trading, to be aware of the risk. All right. Y'all get it? Don't just nod your head. I want y'all to actually understand what I'm saying. Keep it, because if you don't get it, let me know and I'll explain it. But when y'all heard me say the market hit its 27th record high of the year, was your very first thought, is there a move I can capture this week? Did y'all like, okay, whoop-de-doo. What can I trade? Or was it, does this change anything about the companies that I already own for the next 10 years? Whichever answer came to you first is going to tell you the truth about how you actually are operating right now. Whether you have called yourself that or not, I'm about to point out which one you are. You about to find out whether some of y'all already know you're a trader and not an investor. But you need to make investing the priority. Investing needs to be the priority. Do I think a big correction is coming? I think that at all-time highs, we should pay attention just pay attention to these levels. At all-time highs. That's what we should do. Honestly, think about it. Don't you think? It can keep going. But we do pay attention to these levels, though. Gold move is an inflationary hedge against the market. There will be a small pullback. Mr. Westman said, I learned something. Still, I'm focusing on futures to build up my dry powder as I invest long term. That's fine, Mr. Westman, but it don't work like that. All right. If you got income to trade futures, and this is for educational purposes too, Because you can do whatever the fuck you want, Westman. All right. If I got money coming in, all right, this is me thinking that some of y'all working on this is for the 9 to 5 worker. If I got money coming in, that's good. This is an asset for me. Anything that puts money in your pocket is an asset. Anything that takes money out of your pocket is a liability. So I got money coming in. I need to take a percentage of this money and put it into an investment account naturally. Okay? It should go into 4 different buckets. One bucket, high yield savings account for rainy day, maybe 3 to 6 months of income, 9 months of income if you want to be fancy. Okay? You want to be fancy income saved up in a high yield savings account. That's for educational purposes only, right? Because you can do whatever you want. That's one bucket is for that. Another bucket is for investing. Another bucket is for your bills. That way you ain't got to be mad that Apple just took $10 from you, or Netflix just took their check, or Disney just took their check, or Bill just took their check, or whoever just took their money. You want your shit to be on auto pay. You want to pay the shit on time, so you can keep your credit good. You don't want to miss credit card payments. You don't want to miss important subscriptions that you use to generate income. If some of y'all using, if y'all got, also make sure some of your subscriptions are income generating subscriptions like Claude. I pay Claude a monthly subscription because it runs codes and shit for me. It is an agent of mine. Some of y'all pay for ChatGPT. If it's generating you money, cool. If you're using it to turn you into a pineapple, I don't know. You crazy. JJ said my MetaTrader 5. Okay, so you pay for that. That's fine. These are all income generating subscriptions. But anyways, I was saying that you need to have one of your buckets set up for bills so that you don't give a fuck about your bills being paid. That's raw. So now you got another bucket for spending because you got to have a little fun. You can't leave your spending out. You're going to spend money, right? And then you need to invest. And yes, somebody says I need more buckets. That's cool. I ain't stopping how many buckets you have, but know what the buckets is for. Know what the budgeting is for. The budgeting is going to actually give you freedom. It's not limiting you. But some of your money is going to automatically get put on auto pay into this investing account. So investing is out of your hands at that point. You're not stressed out. You're not guessing. You're not emotional. You're investing, whether you know it or not, because you've already set it up to invest on auto invest automatically. And the money that you make, you can put that shit on auto drip. You can put that shit on drip. Drip is the dividend reinvestment. Is it program or is it this dividend reinvestment? Let's just say program for the sake of conversation. But yeah, basically the money that your stocks that pay dividends is making, that money gets reinvested into more stocks, which in return pays you a bigger dividend. You winning. I don't care if it's $5 a week. I don't give a fuck if it's $10 a week. It's better than nothing. It's better than nothing. And it's going to grow compound interest. As time goes by, as your portfolio grows, you might start out buying 1 share of that company. You might start out buying half a share of that company because some of the companies allow you to buy fractional shares, meaning, hell, this stock costs $100. I only got 50. Let me get a half a share. I only got $25. Let me get 1/4 of this shit. Instead of me trying to buy, I could just, after a month, I'll have a whole share. If that's what you got to do, do it. But don't make no excuses. Okay? Y'all feel me? A trader and an investor can buy the exact same stock on the exact same day at the exact same price. Damn, that was loud. Jeez Louise. I thought my phone was on Do Not Disturb. But anyways, so basically a trader and an investor can buy the same shit and be doing 2 completely different things. Okay? The confusion between these 2 roles is one of the most expensive mistakes that you can make in the market. JJ says, I thought you said something new. You ain't say nothing new. I want to break this down though, y'all, before I land the plane so y'all never confuse it again. Yes, dollar cost averaging is good for new investors, says Black Diamond. Y'all need to start with time horizon. Who can tell me Or matter of fact, what do y'all want to know what time horizon is? Do y'all know what time horizon is in reference to trading or investing? What are the last two buckets? One bucket is for savings account, right? In rainy day, high yield savings account, so that money can be growing while it's there. Another bucket for spending, another bucket for bills, and the last bucket for investing. That's four buckets. You can have other buckets for whatever reason you want to have them for, but them the four main ones. You're supposed to have four bank accounts, separate bank accounts. That way, your spending account, can't nobody ever put their hand in that pocket. If you don't give them the routing number and the bank account number, you ain't got to worry about nobody putting their hand in your pocket. You ain't got to worry about no dog catching you. You said you ain't got to worry about catching no dog. You got to worry about dog catching your ass. Oh, no doubt, Keith. No doubt. Do that make sense? That's what the rich people do. Again, this is for educational purposes only, because you can ultimately do whatever you want to do. I'm not telling y'all what to do because I don't know your risk tolerance. I don't know your situation. All right. Get with me on the 1v1 level if you want more help than what I'm giving on this live stream. Where was I at, though? Where was I at, y'all? Where was I at? Time horizon. Time horizon. A trader is operating on a short window. Are we clear? Do y'all agree that a trader is operating on a short window? Days, sometimes seconds, minutes, hours, days, weeks, sometimes a few months. An investor is operating on a long window. Years, 5 years, 10 years, decades. So that single difference right there changes almost everything else about how each person should behave, okay? Do y'all agree? Put a W in the chat if you understand that. I need to make sure we on the same page. If y'all new here, hit the follow button so you don't miss another live. We almost had 10K followers. We almost had 10K followers here at Ironworth Trading. We just made this page last year, y'all. Hey, I appreciate everybody that helped me contribute to making that a reality. Thank you so much. You mean a lot to me. All right, I see a lot of W's. That's all I need to see. So, time horizon. Y'all get that now. Next, the actual goal. A trader is trying to profit from a price movement itself, right? If you trading, you are trying to make money from the direction that price goes in. The stock go up or down, they capture that movement and they get out the trade. They make money when the stock go down. An investor is trying to profit from owning a piece of a business that is growing and it becomes more valuable over time. That is exactly what I mean when I say stop buying and start owning. Stop buying and start owning. A trader is renting a price movement. An investor is owning a business. You literally own a piece of that business as an investor, not as a trader. It's okay to trade. I'm not telling y'all don't trade. But what I'm telling you is something extremely more important than anybody else that you might catch scrolling through TikTok and they trying to teach you how to trade, but they ain't told you to fucking build a solid financial foundation first. I ain't saying everybody not saying that, but that's the most important thing, right? I'm not telling you to not trade. Let's be very clear. I'm not telling you not to trade. All right. The next method, each one relies on. A trader leans heavily on technical structure, chart patterns, precise entries and exits. Everything we covered in the orders type show that we did last week. We talked about position management last week. All right, because execution timing genuinely matters when your window is short. Basically, you getting out of the trade matters a lot when you don't have a lot of time to be in that trade. An investor, though, leans more heavily on fundamentals. Is this a quality business that I'm about to buy? Is the price a good price? Is it likely to be worth more, a lot more, in 10 years than it is today? Both of these approaches both of them require research. You got to do research either way. But they are simply asking different questions with the research that they get. All right. Good morning, Bebe's blessings. So, a trader manages risk trade by trade. A stop order on every single position. It should be a stop order on every. You should put a stop loss on every single position. But a short time horizon means there is no time to wait out a bad move. Whenever there's a bad move and y'all holding them trades, you screwing yourself. All right, I'm gonna say it again. If you a trader, you day trading, you swing trading, the moment the stock goes the opposite direction that you thought it was gonna go in, it fucked up your entry level. You have to think about beta. And for the people who trade in futures, it fucked up your entry level. You don't have much time. You should have some type of strategy to where you have a level to get out if it goes the wrong way. How much buying power do you got for you to sit there and stomach a 10% loss, 15% loss, 20% loss? How many times are you going to do this over and over again, my futures traders? But to my people that's trading stock options, your ass is grass if you don't take profit when you're supposed to. You bought a bucket of melting ice cream. You bought a ticket to a concert that is over at 8 o'clock and it's 6 o'clock p.m. And you trying to sell the ticket to somebody else at 7:30. Nobody want that shit. Ain't nobody finna buy it. It is expiring, buddy. Time is running out. Okay? You don't got all day, all night to get out that trade when you trade in stock options. My point is, a trader manages the risk trade by trade because a short time horizon means there is no time for you to simply wait out a bad move. An investor, however, manages risk at the portfolio level. Are we clear? We should be crystal clear. If not, I will explain it better. If it's not clicking, I'll explain it better. But what do y'all think about what I just said? Any questions? Any questions? There's a big difference. I know y'all starting to really catch the gist of what I'm saying. Do both, but kind of lean heavy towards investing. Warren Buffett, this guy right here, OG, triple OG in trading. I'm not trading in the stock market because I don't even think Buddy trade. And he might be like one of the most successful investors of our time. He's still alive. And if I'm not mistaken, he got really successful after the age of 60 to all my senior citizens out there. All right. But do y'all got any questions? Maybe TikTok not let you. An investor generally tolerates short-term volatility, and they okay with that. They okay with the stock going down a little bit. They can stomach it because they looking at the bigger picture. They investing for the long term. Y'all know what they do when it go down? They don't get out. They buy more shares when the price go down. Long-term investors buy more shares most of the time when they believe in the company. Black Diamond said Warren Buffett started Berkshire Hathaway. That's a very successful company. Any questions? A temporary drop to a long-term investor does not change the long-term value of a well-run business. They still investing in that business. So let's apply this directly to what we just discussed, right? When the market hits a 27th record high in a single year, listen, SPY hit a record high 27 times just in 2026. Ain't that crazy? So when that happened, the trader is asking a very specific question. Is there a short-term move happening right now that I can get in on? And exactly where am I going to get out if I'm wrong? An investor is saying a completely different question. Does this change anything about the business that I already own for the next decade? Or do I simply keep doing what I was already doing? Neither question is more correct than the other one. I'm not saying one is more right than the other one. They are both legitimate questions. They are both professional questions. The problem is not asking one or the other. The problem is not knowing which one you are actually asking. Neither role is superior. Any questions? What do y'all think about what I just said? I don't want y'all to open a position as a trade. You got a short time horizon, right? Technical setup, clear exit plan. The trade go sideways, it go against you. And instead of you honoring the exit plan that you built as a trader, because you said you was gonna get out the trade if you was down $30. You said you was gonna get out the trade if you was down $100. You said you was gonna get out the trade if you was down 2%. Now the trade go down to where you said you was gonna get out at, and instead of you honoring that exit plan, that rule that you made for yourself, you quietly lie to yourself and say, I'm just gonna hold this long term instead. Nothing about the business changed. No new research happened. No valuation was redone. The only thing that changed is the trade lost money, and you start calling it an investment to try to avoid admitting that you was wrong. It's not investing. That is a trader in denial, and then you trying to act like you an investor to avoid taking a loss that you already lost, buddy. You already took the loss. Take it. Y'all know what happened to small losses? What does a small loss become? Because it damn sure ain't break even. A small loss becomes a larger one. So which one would you rather take? A small loss or a larger one? You let me know. Would you rather lose a little bit or a lot? It ain't going back to break even. Right, Black Diamond. So the opposite mistake happens just as often. Somebody owns a genuinely strong, well-researched long-term position. They inside this shit for a long time. They did a lot of research on it. Okay. They might already bought 100 shares. They might got 200-300 shares in this company already. The market have a kind of volatile week. Let's say it don't do too good. Okay. And let's say this person panic sells exactly like a trader would. All right. Just like a trader would exit a failed short-term trade. They thought shit was going to go their way. It didn't go their way. So they got out. So as an investor, if they did that, let's say they did this, even though nothing about the actual business changed, there was no reason to sell none of the shares that they accumulated, right? I've seen people do both of them. They let a trader's reflex make an investor's decision, and in doing so, they get out of a good long-term holding for a short-term emotional reason. Y'all, I made this mistake with Netflix. I had Netflix when it was about $200, maybe some more, maybe give or take more than that, right? And we sold Netflix at about $500-600 when it got to like $500-600. Netflix ended up going to $1,400 a share. I ain't get to do what I wanted to do with Netflix. Tough lesson, Black Diamond. Tough lesson. But if y'all learn from my mistakes and from other people's mistakes, if you could learn, you could earn. All right. Every loss I ever took, I made money from. Hey, listen, every loss was a lesson. Yes, if you study them like you're supposed to, if you learn from them like you're supposed to. If not, you end up going through that same lesson again. And when you go through the lesson the next time, it's actually harder to get. And it might whoop your ass a little bit more than it whooped your ass before. So, the standard that I want every one of y'all operating under starting tonight or starting today, before you enter any position, what's the lesson you learned? Stop fighting for. I learned delayed gratification is better than instant gratification. I learned a lot more than that too, but I just learned. I'm still learning to not be so caught up on instant gratification. Be an investor and don't invest like a trader. I'd rather trade like an investor than to invest like a trader. Kind of sound crazy, but it'll make sense. It'll make sense. Some people, so they'll buy a stock today and they'll sell it tomorrow, but they're not looking at the bigger picture. If you buy, there's some people that bought AMD, Palantir, Nvidia when they were under $20, and these people sold those great, wonderful, sweet positions when Nvidia, when they hit $70, not knowing that this shit is going to do so much in the future that you probably should get more shares than what you bought. You should probably be accumulating as many shares as you possibly can, according to my calculations. Face eye. No, I'm for real. But look, this is what I was telling y'all. Before y'all enter any position from now on, decide out loud in your own head, or you could write it down in your trading journal, assuming some of y'all actually doing that. All right. You need to decide before you get in any position which one you are being. Are you a trader or an investor? Let that decision govern your behavior for the entire of your trading life. Matter of fact, for the entire life of that position. Let's keep it simple. Let that decision govern your behavior for the entire life of that position. While you are in that trade, whether you bought shares to be an investor, or whether you bought a leap, whether you bought a swing trade, even if you're in a day trade, make sure you know which one you are. If you are trading this position, your stop order is not optional. You don't got much time. Your time horizon is short. You got to get the fuck out the trade if it go the wrong way. If you are an investor on this position, short-term volatility is not a reason to get out the trade. Just because the stock went down a little bit don't mean it's time to get out. You can scale out. You could buy more. You can scale in. However the case may be, your decision to exit should come from new information about the business, not from a scary red candle on the chart that went like this to you and you jumping and shit. You scared. You scared that the shit finna beat you up and take your money. TikTok, figuratively speaking, TikTok. I'm just playing, okay? Any questions y'all feel about what I just said? Because that covers what actually happened in the market last week. It covers what to watch for in the week coming ahead. We talked about the real difference between operating as a trader, operating as an investor. What is unclear, y'all? What do y'all want me to go deeper on before we close out? Buying in on a position already owned. If I already own that position, that's called dollar cost averaging, Filthy Mac Nasty. And that is an entire live stream of its own. I will add that to the list. I will add that to my handy dandy notebook. I'm finna write that down and make sure that the next class I do, it'll have dollar cost averaging in it too, because I'll go over that as well. You never talk about it enough. Do y'all homework on dollar cost averaging. All right, in regards to buying in on a position that you already own. DCA, dollar cost averaging. Any other questions? All right, so look, I told you I was going to tell you about QBTS before I leave, right? Just before I land the plane. Let's spend a little minute talking about this company. Let me get my notes. All right, so my buying level was for QBTS. Let's see. Give me a second, y'all. Because I wasn't really going to tell you about this one, but it's okay. Because it already passed the buying level that I got in at. So again, it ain't going to be the same trade. But it's okay. I'll tell you where I see it going. QBTS has seen a surge in orders this year. They got a total contract value in the first half of the year increasing more than 11 times year on year It holds $40.7 million in pending orders, coupled with the $20 million university order for complete systems. They got AT&T's telecom expansion and a recent collaboration with NASDAQ Financial Anti-Fraud, significantly accelerating its commercialization. This positive momentum is a medium to long-term driver. Short-term stock price movements are more driven by sector sentiment and the pace of volume breakouts. So I got some price levels on QBTS right now, right? This is where I think it's about to go to. I'm digging my notes. Let's see what we got. All right, here we go. I got in at $20.50. You said it's the best time to buy puts. It could go back down, yes. But I'm QBTS, D-Wave Quantum. Could be, okay? But I'm just giving you my price targets. I'm buying it at the market price. I'm buying more. I'm not trading stock options on this. I'm buying more. Not saying you can't trade stock options, but the spread might not be worth it, okay? At $21, come on. It's a no-brainer. But you can trade stock options on it. But the spread might not be worth trading options on it. Make sure it's a tight spread if you're going to pick a contract for stock options. My first price target is $25 or higher. It hasn't reached it yet. $25 or higher, okay? All right, so I'm going to say this is my recommendation for this, or what I see for this is a short-term uptrend, right? Has begun. We got a short-term uptrend. Significant buying activity has been observed, right? A lot of buy orders, a lot of people buying calls. But like I said, I'm not fucking with options because the spread probably bad. Are you waiting for the retest? I'm just saying this company develops and provides quantum computing systems. This is a commercial supplier of quantum computers and the only company that builds both annealed quantum computers and gate model quantum computers. The company creates value for its customers through practical quantum applications in various fields. All I'm saying is I like it as an investor. I'm not really thinking about this as far as trading. But let's pretend I had a margin account and I can get 100 shares or 200-300 shares at one time instead of having to deal with stock options. Let's just say I felt like I was pretty confident in it going up instead of down. Sure, like medium term. So if I was conservative, I would establish a base position. All right, $20 is a good entry for this. Add to the position if the price dropped to $19. I'm going to add to the position if this shit dropped down to $19 this week coming up. Short-term profits, $21 like it reached. $23 is the next level. $25, but my medium-term target, based on what everybody else expect, $30. Let's say that this trade went to $30 from where it's at. That's a decent trade. I ain't mad at it. Can you buy margin non-options? I don't know, Filthy McNasty. You might have to check and see. You let me know. Nah, for real, let me know. Hard stop loss on this one, though. If the daily closing price falls below $19, I'm going to reduce the position to mitigate risk. Meaning I'm going to get the fuck out of the trade and probably leave one contract. I might leave a few in there just in case I wasn't wrong. But I'm not finna leave all that dip on the chip, okay? I got 3 reasons for me buying QBTS. They got strong. This is a strong support level. There's also a lot of support from this policy, this U.S. quantum policy, that confirms that this industry is going to grow. They got potential to grow. They got potential to grow. There's a lot of support on the policy for quantum. Y'all go look into it. U.S. quantum policy. Order volume has increased tenfold year on the year. And the commercialization process is moving from the conceptual stage to the practical application stage, continuously acquiring important customers. Number 3, technical indicators. They show a bottom reversal and the formation of an upward trend, an upward twin looking at. Okay. There we go. They bottomed out. Now it's looking like it's about to start going back up. Leave no dip on the chip. No, I'm for real, Keith. We got to be careful with that, with our risk management and our position sizing. I'm setting a strict stop loss at $19. And me, for anybody that's getting in here, like $19.50. You could say $20 as a stop loss, really, but yeah, $19 is a stop loss for me. $19.50. I'm going to enter the market in stages. I'm not investing a large amount. All right. I'm aiming to achieve an upward trend in the medium term. This is driven by both the theme that I was just telling y'all about and literally strong profitability. That's it, though. That wraps it up tonight, y'all. Do y'all got any questions before I finish? Do y'all got what? How can I help y'all before I leave? How can I help y'all before I get up out of here? Any questions? It's more where that came from, too. I just wanted to make sure I go over. I got to do more research before I tell anybody about it, because I don't want y'all blindly buying shit without doing the research. Would you recommend learning options first, then futures, or learning them both at the same time? Your brain is capable of doing both. You can do anything you put your mind to. Which one do you want to do is the question. I put it this way, Key. Options are more complicated, more complex, because you have to take more things into account. But do that mean take the road? Do that mean take the easy route? You require more money. QBTS was $10 in 2025. Yeah. Thank you. Futures requires more money. Keith. It's easier though, because all you doing is pressing buy or sell. But it requires more initial margin. It requires more money, more buying power, more leverage. You can, however, trade the micros when you trade in futures. That will be very helpful for you. I just started a paper trading club. If y'all join, I will get on the phone with you this shit is free. I'll get on the 1v1 with you, help you set up your paper trading account. If this is for the beginners who have you want to get into trading and investing, but you don't know how, I'll teach you how to use the platform, the software, and then you will end up learning how to do it for real by the time you're ready to put real money into the market. But it's important to know how to use the software. All right, some of y'all never got in because nobody ever showed you. That's what the paper trade brigade is for. It's for people that want a paper trade that's not really at the level to using real money. For the people that's ready to use real money and you serious and not curious, join the community or inbox me for the 1v1 if you need more advanced information or you want to learn further than where we just took it at. If y'all just want somebody to talk to, my inbox is open too. All right, you just want somebody to bounce ideas off of, my inbox is open for y'all. All I ask is that you hit the follow button first. Stinky Pinky, what's happening? Yeah, that's all I do is ask that y'all hit the follow button first. Share the live out, show some support. That's all. I appreciate y'all for tuning in to the Ironworth Trading Show. Y'all been a wonderful audience. I don't see enough questions in here, so if y'all do got anything that I missed, inbox them to me, please, and I'll answer them for you. I only missed it because TikTok didn't show it to me. I wasn't ignoring you. So inbox me and I will answer your questions for you, y'all. It's 3:50 a.m. Sunday, August 16th. We're going to make today twice as good as yesterday and half as good as tomorrow. Again, I appreciate every single one of y'all, and I'm here to serve y'all. So please don't be afraid to ask me no questions. And if I can help you any way, in any form or fashion in your trading journey, allow me to. All right. All I ask is that you be servable too, like be able to be served. Some people are impossible to help. Y'all ever met somebody like that? And you just doing your best to help them, and they just impossible to help. Not able to be serviced. Not able to be served is crazy. You done went into the restaurant and you being rude as hell to the server. They won't even service you now. And they can service whoever they want to serve. I'm willing to help whoever out there. I don't care who you is. Inbox me your name and your number. I got you. All right, y'all enjoy the rest of y'all night. If y'all learned anything tonight, do me a solid and put a W in the chat. Yes, Filthy McNasty for sure. Yeah, if y'all learned anything tonight, put a W in the chat so I can see. If you came in at the end of the show and you missed anything, this video will be posted on YouTube tomorrow. You'll be able to watch the replay. All right, this along with the other show I had that you missed 2 days ago, right? It's probably going to be 2 or 3 episodes dropped in the same day. But y'all can watch the replays. They usually an hour or 2 long. This replay going to be 2 hours long because I've been live for 2 hours. I'll probably chop it up and take the cuss words and stuff out or bleep them out. Chilling, been here listening all night. That's what's up, Stinky. I appreciate it, man. You usually come in and correct me when I'm wrong, you know what I'm saying? So I must have been doing a good job. You know? Cheers. What's good, Mr. Ombudsman? What's happening? XRP fell under $1. I seen that shit. How many of y'all invested in XRP and you waiting on it to get back to all-time high so you can get the fuck out? What do y'all think about Bitcoin? What do y'all think Bitcoin is gonna do in the next year? It is definitely it's having a bearish moment. Solana $75. I'm loving it. Oh, I'm loving it. Bad news after bad news for Bitcoin. Yeah, whatever. Let's look at this shit from the bigger picture. Over the past 5 years, how many times we knew Bitcoin was going to do this? We talked about it. We predicted it. It was not a surprise. Here at Ironworth Trading, around the same time last year, we literally said, Bitcoin gonna fall. We buying puts on everything that's Bitcoin related in the stock market, and we gonna make money the whole way down. And then the money that we make from the puts, we gonna buy the fucking bottom of Bitcoin with it. And we gonna ride Bitcoin all the way back up to $144,000. $150,000 from 60K. Yeah. I know I sound crazy, but we're gonna see how this works. That would be good, wouldn't it? I know that's optimistic as hell. But it ain't stopped going down. It ain't stopped. I mean, it did kind of stop. It do look like the bottom. You know, we expected 50K. It hit 50K. No, it didn't hit 50K yet. That was in 2024. Yeah, we expected it to go down to 50K. It hit $58,000. I have been putting money into Bitcoin for 2 years through Cash App. I don't know what to do. Now I do. Hold. Now you smart. That's what's up. It has Voodoo Force Field at $62,000. Yeah. That ain't a Voodoo Force Field, JJ. It's waiting on you to buy more before it take off. It's like a train that JJ got to get on that train before it leave. All right? It's waiting on you. Because if you wait, If you wait, the train got to go without you, man. I can't wait. Train can't wait too long for you, JJ. Jingleheimer Schmidt, nah. John Jacob Jingleheimer Schmidt. I don't think I ever seen the word written out like that since I was a kid. It's a Jingleheimer Schmidt. Anyways, yeah, we saw this coming for Bitcoin. Excuse me. Yeah. Any questions? Y'all got any questions before I end the live stream? I'm supposed to bring that off. We started talking about crypto. I don't want to start bringing in the crypto bros because you know they up at all night, all day, non-stop. You want to go night? Yes, I do. I'm gonna let y'all have it. I'll holler at y'all tomorrow. Again, anybody that need my help, I'm here to help y'all. Hit the link in the bio, y'all, to join the community. I'm waiting for you, okay? I'm waiting for you. Either way the market go, we will be eating. When do you usually go live? I'll be missing you. James G, you don't got to miss another live stream. Hit the notification bell. Or subscribe to me on YouTube just in case you do miss a live stream. You're going to get the YouTube video and you will never miss anything. Stinky Pinky said, enjoy the rest of your weekend. You too, man. You do the same thing. Enjoy the rest of your night, your day too. And y'all remember, you got the power to make whatever you want to happen if you just think about it and speak about it and move in action. Walk in faith, because faith without the work is dead. You got to put in the work. This is you putting in the work. Because if you see yourself being a profitable trader and you think about yourself being a profitable trader or a successful investor, you talk about it, you think about it. You studying and putting in the work is you actually walking by faith. You can have faith that you're going to be a profitable trader or a successful investor, but if you don't put in the work, the fucking faith is dead. Vision without a plan is just a hallucination, says John Jacob Jingleheimer Schmidt. Yo, we almost hit 3,000 viewers tonight, y'all. It's amazing to me that over 2,000 people listened to me tonight. Maybe about 50 concurrent viewers. Like about 40 of y'all stayed in here through the whole thing. So 40 people is a lot of people. That if I was able to teach 10 of y'all, I had a wonderful day. Wonderful day if I know I at least taught about 10 of y'all. All right, so again, y'all enjoy the rest of y'all night. I keep saying bye, but I ain't went nowhere. That's how I know I love doing this.
So we didn't learn. We didn't learn from last time. We didn't. So we didn't learn.